Welcome to TradeTheMBI.com. This is John. This report is for December the 17th. Past the halfway point, I finally got my broken tooth fixed. Oh my goodness, the pain on that was excruciating. But back and just in time because we're about ready to finish out this year and we want to continue to do what we've been doing, which is making money. So let's take a look at what the current readings are. We knew we got overbought in there. We got attracted to starting the setup as we declined a little bit, and that was fine. And still, we can see shorts adding into this overall setup, but overall, with what we're looking at the ratio histogram, that's still positive as long as that orange line stays above and continues higher. It could be folly for shorts. We'll have to see if something breaks down on it, but overall, particularly if we dip right below that negative 45 on a little bit more weakness and then come back up, oh, that's going to be a positive year-end look, so we will keep an eye out for that. Nothing special support resistance wise, moving all over the place. I mean, you're halfway between this one, that one, didn't quite reach the one down below, came up a little bit, lots of little lines you can draw from it, all fun stuff. Heading back towards the midline of the Bollinger, so you would think that it's got to reach there, but you're at the 13 EMA, popular for institutional guys to want to take advantage of a little early weakness for the holiday. Yes, I know there's fiscal cliff, blah, blah, blah. There has been for months now. Everyone knew that they were not going to reach an agreement, and still it's prime headlines, and that's fine. Headlines really don't move the market unless you believe in random walk theory, which states that the market's just going to go with what everybody knows. You can't predict anything, and I think we've shown that you can make some pretty educated guesses based on probabilities, not just hoping. So huge decline in both the price oscillator momentum as well as the numeral. Not too big a shock with that. We kind of saw that we were going to be in this middle of nothingness after we had just turned green. Got a little push up to the target from that halibut. It'd be nice to see another signal pop in. Now, we took advantage of right there. We were at the 60s and we were getting about 55 cents for our puts. And, most of Friday we were like right in the middle of it, dipped slightly below, and that's fine. So we get those few shares. Not ready to sell next week. Maybe if we get another weakness in the coming day for Monday, we would probably sell puts again because we have a light position and we got out of quite a few others. So we're freed up. So we've got capital to invest. Almost lost our USO. In fact, we'll go ahead and take a look at that. We'll go to the website. Just click the member page for this one. And best up. There we go. Pops up a new page for us. And had 900 shares. We sold the 32 calls. They did not get taken from us, so we had to keep the money. So that reduced our overall cost basis, and we're down at 28.73. So that's pretty good from current value versus what our position's costing us. In fact, you know what? We have that. I've updated it. We can always look at it real quick. Performance portfolio. Since we're heading to the last 15 days of the year, might as well do a checkup on where we're at. And overall, 58%. We were hoping to get around 70. It's been a tough year, no question about it, back and forth. We missed out on a little bit because of the early part of the year. Never gave us a retrace to really feel comfortable about jumping into, and it just kept going, so it cost us a little bit of time. Futures, yeah, we killed futures, no problem there. S&P for our ins and outs, 20%. Modest, it wasn't bad, it wasn't horrible. From a stock standpoint, now we're down to not 6,000, but 600 of CLF. Making sure that correction is in there. And what these were huge negatives before really pulling down on our overall value. X turned around to the upside. We got rid of a bunch of those shares. We got out of the WLT at a nice gain. And we're doing excellent with our USO position. We're now upside down like $30-something on the USO. And we've closed all these. So this is what we did for the WLT. We did that for the X shares. So, for all the concern and, worry We quietly, in very slow manner, you didn't need to day trade any of this. This was all just stuff that gave you either the night before, or we set a limit that we were looking to get into, and so far 58%. Not as good as we did last year, but not every year is going to be the same, and that's okay. But positive signals from USO, and if we get a little bit more of a bump, then we'll probably look to sell calls again. Not just yet. GLD didn't do anything overall. We're not in that one, but I always like to show it because it kind of gives a reference. And some people had asked me, we hadn't looked at the VIX in a while. Let me pop it up real quick because it was interesting. We ended up with the halibut signal, and the VIX came back in here. And we don't talk much about the IVM or the volatility buy signal because we get our other reads from both the up-down power that take into account a little bit more of a compilation of these, as well as a few others. But we even had several of the bifractals going into the VIX for a nice pop-up, but quickly approaching overbought, minus 13. So maybe a little more down, and we're likely to see a turnaround on that. CLF just exploded well past targets, everything, which was fantastic. So if we go back to portfolio, we'll look at CLF, not an issue. And what we did was we had sold the 30 calls for the shares that we'd been put at 30. And the whole concept behind that one was just to acquire, just pick up the shares that we got, turn around, and just collect the premium on them for the week. We were still holding 600 shares that we weren't doing anything to, and we accounted for gain and loss in those. And we're down to a 31.96. Current price is almost 34. We're fine. We got 600 shares going into the end of the year on it. We'll continue to play it. Not quite overbought yet. But if we do get a retrace that gives us a proper signal, we will definitely add into the setup. X, it was a long time ago. We were back at this level, and we had projected that we would get back there. Wrong page. That's the one I want. Let's go ahead and take a look at X, because we had 500 shares. We sold calls on 3 as well as puts for a little over $1, and proceeded to jump a little bit more than anticipated, particularly on the Friday. I mean, if it had been right around where it was at the start of the day, and that happens. It's fine. We still have 200 shares at a ridiculously low cost basis now. Didn't quite get it to 0 on it, but we did okay considering how generally negative this was throughout. I mean, I can scroll back through most of the year. We'll see that it was not an attractive stock to own once the new year came. Pretty much read a big portion of the year. And we had it from all the way up in the 28 category, and we're still able to manage a very successful trade with it overall. And so it just points out that none of these things are impossible. Speaking of impossible, some people thought that it was ridiculous to even contemplate WLT, but we could see the buildup as it was taking place at this particular point. And we went ahead and turned around and sold 35 calls right into this peak move. And, all the commodities had a nice little bounce there at the end of the day. So that cleared us out of the WLT, which is fine. Excellent trade. No complaints whatsoever. We got $36 on a $31.70 cost basis. We did fine. It was interesting because at the start of the day, you could have actually bought back the calls when it was sub 36. It only opened at 35.60. That's all personal preference. I didn't mind just closing it out because we had done what we needed to do. And the whole point was to take our gains, move on. We knew we got a little overbought. The second time we get here into the positive extreme would have looked for a little bit more of a retrace of that, but very positive from its ratio histogram readings. And this is kind of what we're seeing in the market. You're not seeing it dip below with the orange below the cyan, which would signal that positive uptrend has ended. Not seeing that at all. And from the ES standpoint, we should take a look at the ES. Let's plop that one up. Because we know we've got small position, depending on whether you took the ES Z12 or the ESH13, because we're going to have to roll that one over into it. So I put both down. Gosh, I think that I'm still in that overall setup. Yeah, no change for me. Still at the 25. I closed out a few of them and back and forth, but yeah, always good to collect some profit, especially when we had that nice uptin. Was able to capture a lot of that. Lost the handle on that. There we go. So it's pretty much neutral with that aspect. So no big deal there. And did want to show you some other things because we talk about the Apple setup and that, and I show this little automated setup that I do for the 78-minute, which is very similar to the one that's designed for trading the ES on a daily basis. But we had a member, and I'll probably put this one up. He went ahead and did a performance adjustment for Apple using the IBM. And if I put this on the website, those of you that have the indicators, you can go through and take a look at this. But that's crazy, 95% profitability on a daily chart. And the settings provided in this setup are all right here. Just to go through and put in all these different numbers, and you get those results. So always good to look at these things. And it just points out, we've been I haven't talked about it much, but since the hacking and that, I've been in touch with authorities, and they told me that it appeared that someone had just put the malware setup in there to disguise the fact that they were hunting for some source code. I don't know if anyone thought I would be dumb enough to leave my source code for all the indicators and that on the website, but I don't, so kind of futile effort on their part, but it's just interesting to know. Interesting also on Apple, when we look at this, we talked about the fact that I expected the plunge back down to retest the lows. Wanted to see it on a higher extreme, and then definitely on a higher shakeout than this at negative 24. But nonetheless, I mean, now that it's retraced those lows, any movement back above there is going to be very positive. And so I got a little grief from people because I think it's an attractive setup for next week's call setup, particularly with the number of shorts building in and an overall long bias. We're not going to see our upside long targets if Apple doesn't move. And so it was just kind of an interesting setup, particularly when you're playing an intraday that's red trend and it's going with red trend. It sort of creates its own arbitrage effect. So all in all, a lot of good things happening. And actually, I know that we're about to change the password. Will be changed on Monday for everyone. Have a heads up. Extended a lot for new members coming in because we were having a lot of trial members, and I wanted to give them an opportunity to experience some good trades in there. And we actually captured some nice moves on it. And now that we're into the new one with the SSO, we're probably going to be more aggressive with our ES and SSO trades going into the end of the year, less on the broader portfolio, because that's going to be the easiest way for us to get near that 70% return for the overall year. And then it'll just, we'll start it back at zero. Doesn't mean that you have to give up, but you'll be able to then adjust your numbers accordingly. And just because I'm going to have down a couple hundred shares doesn't mean yours isn't going to be a few thousand shares. So that's generally where we're at, and I think that overall it looks pretty good. Was this? This was a good one that I pointed out. Wanted to show some people because we were talking about the signal coming in, and then we had the red trend on PCLN, and this is one of those things I talk about repeatedly, and I guess it's missed by a lot of people. When you're in red trend, you want to look for the market to give you back a little bit more as far as discount, the way I see it. And in this particular case, whether you took the high-low range here, it's about $13, you'd be looking for at least a $14 discount. Well, just because that $4 discount comes in from the close, which was right here 23, right around 20, didn't happen until this massive down day. Well, once that day closes, then you could go down even lower as you begin to cascade lower to capture your entry. Doing this can really increase the amount of profit because the upside target doesn't change. In fact, I'm obscuring the fact that PCLN daily orange dot buy signal. So now you get 3 fractal dot buyers. Now everyone says that there's nobody in the world that would buy at this particular point because let me draw the line. They have this right here, which they're calling this massive gap needs to be filled. And while that sounds good, there's no real reason why that has to happen. There are plenty of gaps that go unfilled for enormous amounts of time. And so that kind of speculation without having a specific statistical analysis on it is conjecture. Now, well, I'll look at it and I'll say, okay, fine, we got a -9 shakeout. That's not bad. We are below the red line, so that does suggest that there's going to be a little more continuation of weakness. But when you have thinly traded stocks like these, it takes them longer to pick up the volume of shares they need. A lot longer. And the same story with some of the individual stocks. This is why it's much more effective for us on the bigger SPY and your broader big indexes, because the larger volumes mean the greater liquidity, and so the things happen a little bit more in tune with the time frame expectation. Some of these guys, they'll have to play around with it a little bit, take out stops, do those kinds of things, just to shake out some more players to get the shares that they need, and that way they can suck it up. But it's always worth noting, because there's plenty of different analysis techniques, and boy, didn't I do analysis strictly technical for decades, but it just became insufficient. And so I just like to point out that there's some different ways to approach the market, and we've been trading it effectively with our portfolio this whole year now, and those are the numbers. So that's basically where it's at. Not going to run on here, because we're just going to let the market give us a little bit of improvement signal-wise, not necessarily price-wise, to attack it a little bit further. So continue to look for me on StockTwits, Twitter. Trade well.